Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 28th of September. And the fear that we were entering into a rising wedge there for the latter part of September looks like it's coming true below 75.70 and that uptrend line from last month. We have a potential breakdown there. Potentially support there at the 50-day line. So far that has kicked in at 75.30, but below that then we are exposed to a move not only down towards the initial September support around 73.80, but also even rolling down as far as the floor of that falling trend channel from February, 71.70, which we thought we'd escaped when we broke through the 200-day line, but actually that rising wedge has done the damage. End of day close back above 75.70 would at least delay the potential rollover for this market. RSI at 48, so that also gives us a warning that below the 50-day line and RSI 50, this market could go lower. Onto the DAX, which I presume if the FTSE is not looking good, this is going to look even worse. Here we've headed down towards that May support line projection, 15,100. Hopefully that will stem the losses for now, because obviously we've lost about 1,400 points from that late July peak. But difficult not to notice the next level down, which is around the 14,500 level. Basically March support and then November, December resistance. At this stage we want to get back really above the old support there for July and August, around 15,500, which at the moment seems to be a little bit difficult. RSI at 30, which is a positive in the sense that hopefully we won't see any breakdown below that 15,100 level on that RSI basis. Moving on to the Dow, which I suppose has also been pretty disappointing. Here you can see that we've not only lost the uptrend line there from last October, that was 34,400. We lost the 200-day moving average as well. So basically we're now staring at the old May support around the 32,600 level and hoping that that will mark the low of the current move. RSI is now in the oversold area, so it's at 29, so that is a slight positive in the sense that we've come down a long way in a short time, but really below that 200-day moving average, 33,800, this market looks tired to say the least, and obviously we've got that post-June head and shoulders formation on the daily chart. On to Bitcoin, where I suppose you could also argue that no news is good news in the sense that we've just stalled there at that uptrend line from back in January. That's around the 26,100 level. Below that line, then there's the risk of a retest of June support around 25,000 rather, and then as a worst case scenario down to the March support line projection, 22,400. But at the moment, just hoping that we'll consolidate either side of 26,000. The earliest buy trigger here would be proper end of day close above the 50-day line, 26,800, or that July resistance line, 27,200. On to the stocks, and starting off with a stock which I don't think I've covered any time recently, but it's interesting to see Anglo Asian Mining have a brief dip earlier in the week down below the September support under 49 pence. The break back above 49 pence though suggests a bear trap. We can get an end of day close back above the gap there around the 64 pence level. This could actually be a turnaround opportunity. So let's see if we can get through 64 pence. If we can do that, then we could be back up towards the top of that broadening triangle from July as high as 83 pence by the end of next month. Ideally see an end of day close above 60, which is the floor of the gap from the start of the week. On to Bradda, which has been bumping along the bottom for quite some time and actually making new lows, but we've had an unfilled gap to the upside and want to see an end of day close back above August support around 3.3 pence. If we can do that, then maybe we'll get back to the main summer resistance for this stock around 4.25 pence, but early days yet on hoping that there will be a turnaround. Cornerstone has been great over the recent past. Great, I suppose, on the fundamental perspective, but also on the charting front. We had an initial target here around 13 pence. The next one was 16, and above 16 now, looking for up to 27 pence or even 28 pence, which is a May 2022 resistance line projection in the upper parallel of our initial target line. But the key here really holding above 16 pence on Cornerstone. On to Chill, which is recovering well at the moment. So we have the bear trap from below The August support there around 4.5 pence, and we've now broken line of resistance way down at 4.1, broken the 50-day line, the 200-day lines at 5 pence, and basically above 5 pence we were looking for 8 pence as soon as the end of next month. It looks as though that might be accelerated the way things are going at the moment. Through 8 pence, the next target after that towards 10, which was resistance on the way down back in June. Next situation is IOG, which has been rather difficult in the recent past. Just the first signs of a recovery here, but what we want to see is an end-of-day close through that neckline resistance. That's at 1.02 pence, so that's probably the earliest one would consider this is a bona fide bottom fishing situation. Above 1.02, we're looking at potentially filling that gap up towards the 1.7 pence level. But at the moment, while we're below 1.02, one cannot get too excited. MusicMagpie is next, and here the picture is of progress within a rising trend channel base. Top of that channel there at 23 pence, so we're not far off that. If we can get through 23 pence, the next level up would be actually up to as high as 38 pence over the course of the autumn, but it is early days at this stage. I think probably at this stage one would just be happy for 23, 24 pence to get up to the area of the 200-day moving average. One of the stars of recent days has been Oxford Biodynamics, and here you can see that we managed to hit the upper target there at 38 pence. The message now is that we need to get back above 29 pence to then retest the best levels of the week. Ideally, we stay above the mid-20s, and recent support there just around the 26 pence level. So probably quite key that the 26 pence area is held there at Oxford Biodynamics. Moving along to Orcadian, a company which I interviewed last week. Looks like it's feeling the benefit of the U-turn in the North Sea that the government's had, which obviously somebody has to pay for the NHS and welfare, etc., etc. We've had a rebound within what looks like a mid-move consolidation. We have been looking for 25 pence for the last week or two on the basis that this is a mid-move consolidation, and an end-of-day close above our previous target at 13 pence could be the trigger for a move towards 25 pence by the end of next month. Optibiotix is next, one of the stars of the summer, and hopefully that'll continue. Here we've had a rebound off the floor of that gap there around 23 pence. Decent closes above a sharply rising 50-day moving average. That's currently around 28 pence, and above 28, looking for up to 42 or 43 pence at the top of that broadening triangle from back in July. Interesting position at Phoenix Copper, where it looks as though we may have had a bear trap rebound from below the March support there around 18.25 pence. If we do get an end of day or a weekly close above that, then we could be heading up towards the 50-day line at 23 pence. You can see that we had a lower low this week, but higher RSI trace, so there is a little bit of a momentum there, and maybe that's an entry point for bottom fishers with a stop loss around or just under the 17 pence level. Interesting RNS from SDX today, and you can see that the shares are trying to regroup. It would be nice to see an end of day close back above this week's gap at 4 pence, because then that could take the shares up to retesting September resistance around 4.8 pence. But early days again on that one in terms of seeing that gap close buy signal. Finish off with TM1, which also had an update today. Shares a bear trap from below the July support there at 1.35. We're looking for them to head up to 1.9 or even 2 pence at that June resistance line. And hopefully they can do that over the next few weeks, especially after the unfilled gap to the upside through both the 50 and 200-day moving averages. So it looks as though some momentum is gathering there. That's it from me today. More updates tomorrow.